Hello and good morning to Leviathan News and everybody out there listening. I'm Sam McCullough, and we have a packed house today. As always, DeFi Advisor is here.
What's up, man? Full house today, huh? This wasn't easy.
Yeah. And then we also have Ace from Aerodrome / Velodrome. He's here with Thomas from Arcadia, and they're going to be talking about their partnership a little bit later on. And we also have Matt from Tapioca DAO to come and talk about their upcoming launch, which is happening starting tomorrow, kicking off.
GM, guys.
GM. Hello, everyone.
Yeah, thanks everyone for coming. Right?
Yeah. So I just we're going to run through some TradFi news because there's been a lot actually over the past couple of days. We've seen a couple of big acquisitions. So the first one is that Robinhood has gone out and acquired Bitstamp. Bitstamp's actually the longest running crypto exchange in the world. Did you guys know that? No?
Nah.
Yeah,
Is that the Korean exchange?
I did not know that.
No,
That's Bitstamp.
I only seen American using Bitstamp, by the way. Only my American friends told me about Bitstamp, actually.
Oh, Bitstamp's the OG. Mt. Gox, if people don't know, Mt. Gox was Magic the Gathering online exchange. And if they would have stayed around, they would have been around a lot longer than Bitstamp. Well, actually, I don't know. No, would have been the same time. Maybe Sam, you'd know better than me. I forget who would have won in that if Mt. Gox stayed around.
I don't know. Mt. Gox was kind of like dodgy from the beginning.
Yes,
with their whole stuff. They operated for like 2 or 3 years without people catching it. But what I found? What I found most interesting about this Bitstamp acquisition? Okay, let me ask you guys a question. Okay, this is the longest running Bitcoin exchange or crypto exchange from 2011 when the prices were in the single digits. And take a guess how much the net worth of the two founders is estimated at.
$300 million.
I'd go over $1 billion.
Ace?
50 mil each.
Okay, well, Thomas is the closest. They're both roughly worth about 250 million, which is crazy because 250 million is only about what 2,500 Bitcoin, maybe 3,000 Bitcoin, and for the amount of money that they spent to start Bitstamp way back in the day, if they had just they could have just not gone through the hassle and bought 3,000 Bitcoin at the time and never had to work in the day in their life again.
First of all, it's a great point, but are you listening to this whale guys like 250 million and he's like, oh yeah, come on, like they're not living serious.
I think it's only here that people are disappointed that they only have 250 million.
I know crypto is an alternate reality.
How unprofessional of them to only achieve a capital of 200 of a quarter billion.
I guess the whole thing about putting Bitcoin on the balance sheet didn't really come until later on, and even Coinbase didn't really do it, right? Coinbase probably could have put like billions of dollars of Bitcoin on their balance sheet, but they never did. I guess they just passed it all back to shareholders.
Maybe they just tried staying out of jail, like that was also a challenge. Like keep your Bitcoin, stay out of jail. You've already made it in a way.
Yeah. So
the Winklevoss twins from Gemini, they kept their majority in Bitcoin, right?
Yeah, they did. Yes, they did. And it's been very good for them as well too. So they're billionaires. And but actually, to talk about another exchange, this is a story that I'm actually pretty excited about because Kraken has kind of announced that they're doing a final funding round of $100 million before they go to IPO. So the IPO is going to happen sometime either later this year or in 2025. But that's great. We're finally going to get another major U.S. crypto exchange to finally become a public company, which I think is the most American thing that you can do.
I mean, I assume this is going to kick off another wave of IPOs, and maybe that's a good sign on the regulatory front for U.S. crypto businesses.
Yeah. So they're doing about a fifth of the volume that Coinbase is doing right now. And I know that Coinbase has like a lot of other product lines. They've got Base and everything. I've heard some rumblings that Kraken's looking at launching their own L2 as well. But I think the market cap, if Kraken would be going to IPO, would be somewhere between like $5 to $10 billion. They're doing about $1 billion a month versus Coinbase's 5 to 6 billion, or maybe that's daily. I don't know, but it's about a fifth right now. But I would really love to see. I mean, I use Kraken exclusively now. I don't know about you guys, but I think they're great, and I wish them all the luck in getting over the line and getting getting to be a public company.
Yeah, I'll say this: it's really heartwarming and exciting to know there's going to be another layer 2 out there. Just what I wanted.
It makes
Are you more relaxed? Are you more relaxed now, Matt?
Oh man.
Yeah, I think it's good. I mean, like it's kind of the end, right? You can't just run private company forever, especially when you're paying your employees and options that expire eventually, right? You only have like what, a 7-year period before you got to vest your equity.
Ooh, 7, that's already a lot, I think.
I think it's how it works. But Kraken's been running for what, like since 2013 or 14, so it's time. All right, and I got one more TradFi story before we wrap over into DeFi stuff, and that was that this group, Kerrisdale Capital, came out and put out a report. Really interesting report, actually. I would recommend everybody to read it. We'll have it in the show notes. Essentially, they came out and put out this whole report on Riot blockchain, and they said, today we launch a war against Bitcoin miners, specifically US Bitcoin miners. They called it an industry of snake oil salesmen that are incinerating both investor capital and the environment and should be banished from America, much like the Chinese RTO frauds that we helped kick out a decade ago. Those are pretty strong words. But then you read into the report. I think the tweet was supposed to be attention grabbing, but the report is pretty. I mean, like, I kind of knew how Bitcoin miners worked on a large level. Essentially, you give money to an operation. They buy a lot of ASICs. They go out, they run the ASICs, and eventually the ASICs get first you have to electrify them. You have to find a large amount of power. Then you run the ASICs for a couple of years, hopefully get your money back on them. And then all the money that you get back, you kind of have to either decide, am I going to keep all this Bitcoin with the expectation that it's going to go up? But at the same time, I have huge CapEx costs because I constantly have to like regenerate my sales of Bitcoin miners because everybody's always competing. They're getting faster ASICs. And so it's a hugely capital intensive business. And so like Riot, the way that they've been funding their operations, or hold on, let me take a step back. So a lot of people were buying like Riot, Marathon, MicroStrategy as proxies for buying Bitcoin before there was an ETF. Now that we have an ETF, you can just go out and buy Bitcoin, right? It's the easiest way to go and get like exposure to Bitcoin itself. But now that the ETFs have come, you can just straight up buy the Bitcoin. It goes into an ETF. There's a really small expense ratio, and you don't even have to worry about this whole mining business. And so what they detailed in the report, which it's worth the read, but essentially the way that Riot's been funding their operations is that they've been doing massive share issuance. They've already diluted 18% this year alone by issuing stock. And they use that to then go out and then fund their operations. So you can see they have some charts here. They have cumulative cash burn that shows that they've burned about $1.5 billion worth of cash. They are sitting on about $1.6 billion worth of Bitcoin and cash, but you can see that they've just been like really pumping up their shares over the past couple of years. So since October 20th, they've issued close to 300 million shares. And they're about to go and issue potentially another 300 million over the next couple of years. So just more and more dilution. Additionally, baked into the cost of all this is the executive compensation which they show here. So there's $206 million worth of performance-based restricted stock that's going to vest over the next 3 years. And so that's 90 million per year for a company that only generated $280 million in revenue last year. And so if you're buying the stock now, in a post-ETF world, it really doesn't make sense because Riot's not been competitive. Like even with all this CapEx and even with all this investment in building like bigger facilities and getting more power, the amount of like monthly mined per share, like their total share has been going down as it's been getting more competitive overseas. And it's becoming much more challenging in a post-halvening world. So I think this chart really kind of shows it, that you always hear about like cost of mining Bitcoin. So on a just electricity cost, you can see that Riot's cost of Bitcoin is about 31,000 for their based on their electricity costs and then also their CapEx costs. When you factor in the stock-based compensation, and you also factor in mining depreciation as well too, they have one of the most expensive total cost to mine per BTC versus like holding the shares versus anybody. So for them, in reality, it's about $142,000 per BTC if you're buying this stock, which Marathon's about 156,000. But it looks like all of the miners, because of this compensation and also the amount of CapEx that they have to spend, it's a pretty crazy business. They're essentially having people buy the stock that's a proxy for Bitcoin, and that Bitcoin price is way higher than it is right now. So if Bitcoin tanks over the next couple of months, let's say we get a 30% pullback from these levels down to like 40 or 50,000, that's really going to hurt their profitability. And these mining stocks may be really in a tough position going forward into the later half of this year. Like I have to say this is like pretty interesting. So Kerrisdale has come out and said that they're taking a pairs trade on this, where they're going long Bitcoin and then shorting the miners, and they're probably doing it on leverage as well too.
Yeah, what's interesting is a lot of people talk about like Bitcoin's long-term economic security model and like how this scales, like going into the future with future halvenings. Like just talking broader, it's really interesting as far as like how this is going to affect mining ops, like going into the next halving, and you're constantly having less and less rewards. Like the literal only answer is price go up, like to fix all that.
Yeah. So we wrote about this today. There's a longer article about this in our Substack, which we published today. I just want to share this chart. So this one shows the relative performance of Bitcoin, which is on the top, versus Riot, which is on the bottom. And this is just year to date. So you can see that the two assets were kind of tracking for the first couple of days of the year. And then it's just been this massive divergence between the two since then. And the short thesis here is that this is going to continue because of all the CapEx operations. There's some regulatory headwinds as well too. Texas, which like one thing that Riot had was that in Texas, they were one of the first Bitcoin miners to come in and get set up. But since then, there's been other miners like CleanSpark and Marathon and a bunch of other people who have come in. And so their edge inside the state is going to be decreasing. And so let me make this chart a little bit bigger. So here's a comparison chart of all the miners. We have Riot on the bottom. It's actually performed over the last year minus 10%. Marathon's up 100%. Core Scientific is up 126%, and then CleanSpark's up 300%. So it's lagging pretty far behind all of its competitors here, which we write about a lot in the newsletter today, and you can find that at leviathannews.substack.com. And we'll leave it there. There's a bunch more news that we cover in the Substack today. We're talking about Frintech launching its own L3, and Revert, which I love. They launched a point system as well too. So that's all in Substack. Please come and
guys, let me tell you, Sam does like the best newsletter out there. You guys should, if you haven't checked checked it. Really, like both you guys here and the audience, I really think that ever since he started doing it, like I guess it was like about a month ago or so, Sam, something like that.
Yeah, around there, a couple of weeks. Yeah.
Honestly, I think it's brilliant. I already think it's one of the best newsletters out there, and you guys should know. It's like it's basically all Sam. And like I don't even know how he does it. Almost every day, and covering so many stories and to that depth. Right on, man.
You live online, Sam, or how do you keep up to date?
Well,
he's probably multiple people, by the way. I'm suspecting that several people on the TG are actually, in fact, Sam. But
so you guys do all the work in sharing the news for me. I just see what comes through my feed and kind of aggregate from there. So it's not so hard
shout out to Peter.
Yeah. Thank you everybody who posts news. If you are a follower of Leviathan News, you can earn some squid points, which is our kind of reward token for helping Leviathan be what it is. And it's actually a real token. You can come to Curve and check it out on Fraxel. We have a squid pool there where you can come and earn some CRV. So it gets distributed every single month. So we essentially track how many stories you submit, and then we distribute the points equally between
and appearances on the show, by the way. Like
yeah, exactly. Yeah.
These handsome gentlemen are also like earning some squid as we speak.
So it's small, but we think that it's going to get hopefully a little bit bigger as more people come and commit to the news. So yeah. All right, that's my spiel about Leviathan. You can come find more on our Telegram page. Let's get to our guests. So we have some wonderful guests today. We have Ace and also Thomas from Arcadia, and they are here to come talk about Arcadia's recent partnership with Aerodrome on base. So it's pretty cool, guys. I've been trying out Arcadia these past couple of days, and I really like it.
Nice, glad to hear.
So what exactly is going to happen with this partnership?
Yeah, sure. So maybe a quick word what we do with Arcadia. So it's basically a platform that connects lenders with strategists. Strategists are people that want to earn yield on chain, but let's say fully DeFi native. So everything is non-custodial, fully on chain. So what you can do as a strategist is basically select a strategy you want. So you want to earn yield with or without exposure to the ETH USDC price, for instance. Once you select a strategy, we will do end-to-end, basically the optimization of your portfolio. So we will select a number of underlying assets that earn yield. We will propose how you can get into that portfolio. So we'll build all the cal data. So in one transaction, you on-chain can deposit assets, do some swaps, deposit it in yield-bearing assets, and then deposit it back in your account. Since it's all, let's say, on-chain in a smart margin account, you can do that on leverage. So if you have a really good yield source, having more APY than our lending rates, then you can really boost those returns. At the moment, we are live on base, and we're mostly looking into, let's say, real sustainable organic yield. So all yield at the moment is coming from AMMs, so by providing liquidity indexes. And recently we integrated Aerodrome, and by now it is, let's say, by far the most used underlying source for yield. So we really believe that Aerodrome is the go-to partner on base for us. So after the successful initial launch, we want to expand the partnership. So next to the non-staked slipstream pools, we will very soon launch as well with the staked slipstream pools and with the V1 Aerodrome pools, both the staked and unstaked versions. So that's in a nutshell, what you can do and how we work together with Aerodrome.
So just for people watching, what's the difference between the regular V1 pools and then the slipstream pools?
So the regular V1 pools, it's more like Uniswap V2. So you just deposit into the liquidity pools, and it's equal for all users. So basically, you provide liquidity from minus infinity to infinity price. While with the slipstream pools, it's more like Uniswap V3. So with concentrated liquidity, so you can specify in which range you want to provide liquidity. Providing in a narrower range is more capital efficient, but comes also with the downside of additional impermanent loss. So liquidity providers or strategists can really fine-tune their risk-reward balances by choosing wider or more narrow ranges.
Okay, so
And-
just so I understand, you're able to take ETH or USDC and then borrow against it with leverage, and then
Yes.
get exposure to these. So this is like the slipstream, like with USDC pool, and then there's
Yeah.
another one as well too. And you're able to essentially take the leverage, put it into these like concentrated liquidity pools, and then determine the ranges that you want to have for those
Yeah.
concentrated liquidity pools.
Yeah. And so we try to make it as easy as possible for our users. So in our dApp, we can do fully pre-made strategies. So where you just specify which type of strategy you want to go into with a certain risk and a certain reward profile. And then we will optimize for you what we think are the ideal ranges. For instance, if you're more risk on and you go into the bull ETH with narrow ranges, then you get the highest APY possible, which can range from 300 to 1,000% in current markets. But of course, since you're leveraging, you're also leveraging your impermanent loss. On the other hand, if you're a bit more risk averse, but still like some yield, you can, for instance, go into our delta neutral or pseudo delta neutral strategies. There as well, we LP in volatile pools, but we use much wider ranges and much lower leverage. So that's what's currently available. We have some nice things in the pipeline. So next to what you've seen in the dApp, we also have an advanced view where you can really select each individual pool and where you as a user can specify if you want to go in one or more pools at the same time, or also specify which liquidity ranges you want. And once you are in a position also to rebalance it, you can all do through our dApp where we optimize it for you. And in a single click, you can manage multiple LP positions. So maybe some alpha, but also as a Slipstream users, if you don't want to use leverage, managing it through an Arcadia account might be beneficial, since you can easily manage multiple pools at once with single transactions. So it's not because you can take leverage that you have to. All underlying liquidity is deposited in the real Aerodrome and Slipstream pools. So it's all on chain. And when I say we, I mean our smart contracts. We never take custody of your assets.
Very cool. And Ace, what are you guys doing over at Aerodrome to support them?
I was just gonna say, like, it's so awesome. I use Arcadia. It's not just because I'm trying to farm points. Obviously, like, I think the team is awesome, and I think they're going to be around for a while. So I'm going to get my points exposure, and wherever that goes, I'll be happy. But I think it's actually easier for a lot of users to enter concentrated liquidity through Arcadia, because you can zap in essentially with one asset. You can either choose wrapped ETH or USDC. Thomas, are there other options?
So from our backend and smart contracts, basically you can go from any asset or any combination of assets into any pool. At the moment on our front end, we want to keep it simple to start. So now it's indeed, you can go in from USDC, wrapped ETH, and native ETH. But nothing prevents us to expand that list. That wouldn't require any additional upgrades of the smart contracts, just some additional features on the front end. And that's definitely something we are working on, that you basically can zap in from any initial asset or even combination of assets and can go in one transaction into 1, 2, 3, up to 5 different pools. As such, for instance, you can also, even if you just want to LP in one pool, can have multiple LP positions with different ranges, so that you are not fully in or out range when price is moving.
Very cool.
Yeah.
Yeah.
It's just like concentrated liquidity it's a steep learning curve. even for experienced DeFi users. So having, one thing simplified through Arcadia is probably, it's useful for the majority of people who they see these high APRs and they're like, man, I want to get my capital in there and I want to start earning some, triple digit yield. You can do that in one click. Essentially, I love how it builds the transaction for you. It shows where your capital's going, where the leverage is coming from, where it's depositing all the various assets that you supplied and borrowed. And then it's literally one click. And I think we were talking about this last week. I think since the Denkun upgrade, it's like a $50 transaction on base has gone down to $1 or something like that. So it's really, really complex on-chain transactions that only you can do on layer 2, like on base right now.
Yeah, exactly. Like what we have built now was not possible on layer 2s even before Denkun. So yeah, the reason we are live when we were live was also because it was timed after Denkun, since we simulated before it, and even on L2 it were still $50 transactions. So on mainnet it would have been not payable. A major reason is as soon as you modify LP positions on Slipstream, that's already a ton of gas. So even if our contracts are hyper optimized, it cannot be further reduced than managing the underlying assets.
So one last thing, Sam, I know you got a schedule. Slipstream is now 90% of total volume on Aerodrome, which is remarkable considering we launched it 5 weeks ago.
Oh, wow.
So it shows you how great, first of all, the UniV3 tech is in terms of capital efficiency and execution. And we've only modified one thing when it comes to the actual UniV3 tech. It's we just widened the tick spacing slightly. So you have double the amount of liquidity for each price range that you do in Slipstream that you do on UniV3. So it's providing, I guess, it's enabling a little bit more swap efficiency, and it seems like it's working well. We've seen higher volumes for similarly sized pools on Slipstream relative to Uniswap. And partners like Arcadia are going to make it easier for more liquidity to flow into Slipstream and away from the UniV3 pools. And I think what's really exciting is that you can set up these bull strategies for a lot of the meme coin communities that have popped up on base, and they can farm, really crazy high arrow emissions if you have the efficient liquidity enabled, and it has to be managed. And I think an Arcadia one-click rebalance, helps optimize that liquidity, and you can get 5-digit APRs if you're staking your LP in the Aerodrome pool. So a lot of exciting stuff coming.
Very cool. I think the Uniswap tech is pretty awesome. Hayden actually had a post yesterday, thinking about building a DCA feature, which he actually built it 3 years ago. Him and Dan Robinson had the TWAM paper that he put out in conjunction with Paradigm. And hopefully they're finally going to get around to building that on Uniswap. But very cool. Really excited about that. I'm actually looking forward to our last guest. They're launching tomorrow, and that's Matt and Tapioca. So they have recently published the Book of Genesis, which goes into in depth into how the Tapioca DAO is going to be launched. There's 3 chapters, and Matt, maybe you can run through and give us the deets on what's happening there.
No. It's a little bit of a process, but so basically, we've been building this for a while and planning this out for a while. So it basically will be starting off tomorrow, June 11th, with a self-hosted LVP of the TAP token. So that's kind of where things start off with. That'll be a 48-hour duration, and essentially. All the configs and stuff. I won't give all that stuff. It's all on the docs. And then basically after that, the first option airdrop that I ever know of using call option incentives will come after that. So that's really cool. The first people to ever receive it will be LVP goers. So that'll be cool. And then basically that'll be running from the 13th to the 17th. And right after that, DeFi Advisor is going to be involved as he is a Pearl Club member. So he's going to be getting his option airdrop for his Pearl. His 2 Pearls, actually, I think.
By
There
the way,
you
it's
go.
currently 3, but I have a surprise with the third one, hopefully. So, and by the way, guys, I was fortunate to get one of these by Matt and the guys at Tapioca itself after doing some stuff. So, shout out to you guys, Matt. Really appreciate it, the generosity over there. Quite a big gift to give, to be honest.
Yeah, no, and he had already had a Pearl, so I didn't even know, but but it worked out. Yeah, I mean, lastly, the big protocol deployment, June 19th, so a little bit about 6 days after the actual LBP. And yeah, I mean, this is going to be the first ever like live Layer 0 V2 composed calls. Just full on Omnichain interop, which I'm really excited about. And yeah, I mean, at first we're just going to be connecting Arbitrum and Ethereum, but we're going to be connecting a lot more chains than that. Moving
Base and airdrop.
Base is going to be one, in the future. So very, very excited about that, and definitely going to be doing some stuff with Aerodrome in the future as well for some markets. But yeah, I mean, it's going to be really cool to finally 2 years in the making to get there and go through each step. It's been crazy the last couple of days just doing all the setup. We got about 131 contracts we're deploying to Arbitrum, so a lot of fun. I actually think the Denkun upgrade, without the Denkun upgrade, we probably wouldn't even be able to deploy. So let alone the protocol
Safe
itself.
for us.
Yeah, let alone the protocol itself. We have so many contracts that are like maxed out and we're like in assembly and stuff. I mean, so it's just gonna be awesome. So we got that coming, and yeah, I mean, basically ties it all together. And that's gonna be the 3 phases of Genesis. So
did your auditor like gasp, like shocked when you like share your Git with them? Like, hey,
Man, these guys had so many auditors. Like I didn't even like I wasn't able to keep up at some point. Like every other week, there's an announcement about that audit and that contest and this
no,
audit.
we've had 20 audits altogether. We actually just put up like the final docs, but a lot of independents like Riptide, Win Hustler, Pashov. Like I could sit here for an hour. Audrey, so many people. And pleasure working with Victor Martinez, who he did Euler V2s invariant suites and stuff. So a lot of audits, and yeah, a lot of gasp at like, what the hell? This is a meaty undertaking, and just people going, this is a lot of logic. But the recent commentary has been saying like the last 2 months, I'd say, when we were doing like our final prep. People were like, man, this code's so much better. It's really good. And, it took a while, but it was really great to finally see like everything just flesh all together perfectly. And, just so many roadblocks and stuff along the way that we ran right over. But yeah, I mean, we got there, and we're really excited to finally be coming out.
It's very cool. So we should be seeing USDO liquidity spreading everywhere over the next half of the year.
Oh yeah, no, I'm really, so at first, like I said, Arbitrum and Ethereum, but then it's going to spread out very quickly. Even Solana, we're working with Layer 0 on the Solana beta that they put out. That USDO, as far as I know, will be the first decentralized stablecoin to bridge the EVM. I don't think DAI's done it. I had to do a little bit more research before I said that, but I'm pretty sure it is.
Yeah, for native issuance, I think you're right. Yeah.
So that's going to be dope in of itself. But yeah, everywhere. I mean, USDO it's going to be like, you're going to look left and it's going to be a new liquidity pool popping up on a new chain. It is. We are trying to hit 50 chains within the next 6 months and 100 by the end of the first year. Let's see if we can do it, but I definitely know it's going to be a lot.
So
By the way, Matt, I just wanted to ask, like, what would be like in your mind a success, maybe on like the TVL side of things for USDO, for example, like
So
in like 6 months, a year, or whatever, or however you guys are viewing.
I don't really care about the TVL side of it. I mean, it's it's kind of like a a number in a cardboard box. I more care about like fees, that we're one of the most profitable protocols in existence, and also the fact of protocol loan liquidity. Like, people have ran numbers and stuff on like our call option incentives and whatnot, and they're like, Matt, if this happens this way and this way, like Tapioca is going to have more protocol loan liquidity than Arbitrum in base assets in like 1 month, right? And I'm like, yeah, I know. It was programmed that way. So poll and fees are the two things I really care about. And yeah, I mean, I just want to have a very profitable protocol. I think not enough protocols look at unit economics, like are we a profitable business? And just returning more out than in, essentially. So
Matt, when value is the most hated word in crypto.
yes, it is.
I just want to bring this up from our newsletter the other day. This was generously donated by Garrett, and cash flow is not something that should be named.
That's great. That is great.
We can empathize with that.
That is great.
Why does everybody hate cash flow in crypto?
It's like that. It's like the meme in Silicon Valley. That hot shit, like VCs, like no revenue, no revenue. We want upside, multiples. How much could this be worth? Not what is it worth right now.
Exactly. I think it's about
I don't know.
It's about us being like boomer oriented, and most of crypto is like, no, don't be so boomers. Like, just give us a token, make it go 100x and go away.
Well, yeah, and it's just like, I think a lot of people don't want to look at that stuff, because if you actually look at a lot of protocols, they're like extremely unprofitable. Like there's very few out there that like you can look at and go, wow. Like, you look at like incentives as an expenditures, their fees as like revenues, treasury as a balance sheet. Like, it's a very small, like Uniswap, just very few amount of protocols that are like actually profitable businesses. And it's tough. I mean, and I'm not saying Tapioca is going to be profitable either. It probably will not for a while, but it's definitely a huge achievement to actually get there.
Well, I think there is a really good opportunity. Maker has been having a lot of troubles this past couple of years. This probably isn't the best chart because the vertical nature of this, but Maker's come down from a peak of about 10 billion. They're sitting at about 5 billion. So they've lost about 50% of their supply. It's not going up anymore. There are many other options that people are looking towards. And I think that there's a real opening for new stable coins to come in and kind of really set their foot as like, we're the new, like, because like Maker's become this homogenized, weirdly set up like RWA facility.
Maker is becoming a TradFi business in a way, you know what I mean? Exactly.
And especially with like the new stable, which like honestly, we should do an entire show about new stable. I don't want to get into it now, but like buy Rune's hand, die will die.
Yep.
And the new stable comes along, and then there's the weirdly pure die.
There's the pure die. It's like, okay, you guys who want the decentralized stable coin, here's a bone to go.
Like, we're gonna copy the Liquidity V2. Like, I just think there's the market is open right now. Like, Maker's on the ropes, and no other stable coin has kind of come in and set up and said like, hey, we're gonna be the fully decentralized stable coin that is used on pretty much everywhere.
And I think Go had a really big failure from being depegged for so long, and our good friend Token Bryce did a great job on bringing it back, with some of his treasury moves. But it just, other than that, it's like CRV USD, and that's about it, folks.
Yeah. So with like, can you talk about like what layer 0 allows you to do to essentially mint native on all these networks?
Yeah. So I mean, like a big component to Tapioca was like unified liquidity, defragment liquidity. So essentially, one of the big thing is like, the protocol that actually mints USDO is called Big Bang, and Big Bang is only on Arbitrum. So essentially, when people are opening debt positions, all of them are actually opening on Arbitrum, and then the USDO is being minted on Arbitrum. It's just the fact that like if you, let's say you're like on, I don't know, like Barachain or Base, and you don't want to even touch Arbitrum, you can literally supply ETH and then mint USDO from Base or Barachain without ever touching Arbitrum. And that occurs through layer 0. That we basically use a wrapper called a metatoft that you could supply ETH from like any chain, and essentially that ETH then collateralizes the position on Arbitrum. So it creates like a hub where all the markets are on Arbitrum. There's one interest rate. There's not like 100 deployments, and it's just everything's linked to that one deployment in like a hub and spoke model. And yeah, I mean, and you could do some really crazy stuff where like you could mint from like Base, mint USDO onto Arbitrum, and then lend it to a market on, let's say like the one of the super chains and lock it. Like you could do whatever you want, like in those types of manners, and that's using layer 0 v2 compose calls, which are really cool. So
very cool. Well, in the interest of time, I know that we could go on for a lot more, but I'm really excited to see the rollout of Tapioca. The LBP is starting when, Matt?
Tomorrow, 5 p.m. EST. So genesis.permissionless.1, and everybody, definitely check out at Tapioca_DAO or tapioca.xyz. Get all the info you could ever want.
Awesome.
So,
DeFi Advisor, thanks for making this happen today.
Thank you for actually being able to pull it off as usual. And you're the man. And thanks for all our guests that came here today. Apologize for the thing last week, Ace and Thomas. I was all over the place really with my mind in Belgrade and stuff, and didn't get to it on time. But happy to have you guys
was
here.
There as well last year. Understandable, right?
Yeah, but happy to have you guys on to discuss this partnership, because when I saw it on X, I was like, okay, I want to get these guys on, especially that I'm pretty sure it's the first time, Thomas, that you guys from Arcadia have been on, right?
Yeah, indeed. We're quite recently live, so thanks also for the invite. A lot more will come. So what is live now is really only the start. So I would say follow us and see what else we come up with next week.
I heard great things about you guys, to be honest, from a friend I really respect that looked at your code, and he told me like, man, you should talk to Arcadia. And I was like, oh really? Okay, I will. And thanks a lot for coming, and hope to see you again whenever there are updates, both on Aerodrome and Arcadia, and on Tapioca. Matt, thanks a lot for coming, man. Appreciate you, and good luck tomorrow at Genesis.
Amazing.
yeah, cheers, everybody. Thank you so much.
Yeah, and thanks everybody watching at home. We will be back tomorrow. We have the Holy Held guys coming on.
Man. Anton is coming from Holy Held. That's nice, man.
Yeah. Do you guys have Holy Held cards? It's like the best like crypto debit card out there. There's no second best.
Man, I want these guys. I want these guys operating in Israel already. I want that car. I want a normal card, man.
I know. We'll have Holly Held on tomorrow. And thanks, Thomas. Thanks, Ace and Matt, and everybody listening at home.
Right. Thanks for having us. Bye.
Thanks a lot.